What's up guys, welcome back to InvestingPH. For this monthly update, I want to first discuss the delisting of one of the stocks I own, how it would affect my portfolio, and what's my plan for it. So you may have heard of it, that Metro Pacific Investments or MPI would delist their shares from the PSE. Now just to clarify things up, MPI isn't delisting because it's bankrupt or anything. The company is doing fine and is still growing as of now. Actually, this for me has one of the strongest moat of any company here, which I've discussed in my old stock analysis of it. It has business in power, water, toll roads, light rail, hospitals, real estate, etc. Their businesses are what consumers use daily. It is a necessity. You can't just easily ignore the products they offer. But the problem is, even though it has a strong moat, MPI's shares is trading at a very huge discount for quite some time now. In fact, if you buy its shares right now, you're buying their equity at a discount, which is seen in their price-to-book ratio of only 0.6, meaning you're getting 1 peso worth of equity for only 0.6 pesos. This is what the company has been going on since the start of the year, that the company's intrinsic value has not been fully reflected in its share price for some time, which I think the Japanese firm that will buy out the minority shareholders has seen. Now the tender offer is only 4.63 pesos. For me, this is far too low, since this price is still buying MPI's equity at a huge discount. But remember, they are investors as well. Of course they want to buy the shares at a cheaper price. So the main question for me is, would I take the offer? Now MPI is 4.1% of my whole portfolio and the average price that I bought it is 3.72. I actually have nothing to lose if I accept the offer. This is a 20% gain for me, and if I add up all the dividends I got for the 3 years I've held the stock, the total gains I got is 28%, which is a 9.33% return a year, which is not bad. So although I wanted to hold this for a long time, as I believe it's a strong company, if the tender offer would push through, then I just accept it since I don't have any plans to own a private company. That's just too much of a hassle. But of course, I wanted the tender offer to be higher, but if it's like that, then I just accept it since I have nothing to lose for that price. And since there's still a lot of companies right now that are still undervalued and has a higher dividend yield, then I'm well okay with it. Now there's actually one more thing I want to point out, and this is the importance of computing the intrinsic value of a company and analyzing it first before you even buy it. Imagine if I just bought MPI when it was so high, then I'd be losing a lot of money now because I just blindly bought it back then. But since I have a guide, then it not only prevented me from future losses, but also helped me in gaining money from my investment. Although it's not a guarantee, but so far analyzing companies and computing my buy price has really helped me in sorting investments. I am not tempted to buy hype stocks because it has to pass through my checklist first, all the ratios plus my buy price before I even conclude that it's worth buying and is undervalued. Unlike for a lot of investors who just rely on pure speculation, relying on information that has no concrete proof. I'm talking to investors who hype Tito, by the way. So much for rocketing to the moon. Anyway, so just a warning to investors. Yes, we can't predict the future, like this privatization of MPI, but what we can control is investing in great companies, companies that have good financials and are trading at a fair price. It has to be in combination. Never use speculation to invest in any stock no matter how popular it is. Now before we head on to my portfolio, if you're new to investing and want to easily scan for stocks to invest in, then Simply Wall Street is there to help you out. They have tons of data available for you and it's so easy to understand. Imagine they give you graphs, comparisons, valuations which are presented wherein a child can understand. And for those who are having trouble keeping up with the stocks they own, then this platform also does the job for you. They update you on the stocks in your watch list from earnings release, dividends, insider buying or selling, or if the company falls below your computed buy price. And speaking of buy price, if you don't know how to compute it, they also have a computation for you. But of course, a warning, still do your research about a company if it's really worth investing in or not. Don't just rely on the buy price alone. And there's more. They also have a portfolio tracker that lets you assess your portfolio's health, detailed returns, and a lot more. So if you want to try it out, you can head down below and sign up using my link. They offer their basic plan for free, and if you do avail their paid plan using my link, you can get 30 and even up to 40% discount. So what are you waiting for? Level up your investing journey with Simply Wall Street. Now back to the video. Let's head on to my portfolio. As of the end of April, my total invested money has now grown to 1,805,900, and the total return on my portfolio is 13.70% or 247,411. making my portfolio's value to 2,053,310. Now, if you look at my portfolio, almost half of my stocks are still negative. I'm into positive because of the dividends I've reinvested and also because of the few winning stocks I have. Now, I'm not bothered about some of my stocks in the deep red because I know it's a strong company and I'm even willing to invest more money into it. And when I look at my portfolio, I don't just look at the performance of one stock. I look at my portfolio as a whole. I've accepted that you can't have all winning trades. There will be some losing investments, but as I've said, since I've analyzed these companies myself, I'm not bothered since I know it's a strong company, and the best part of it while waiting for the stock price to go up, it's still giving me consistent dividends every year. Now, if I compare my portfolio to the index, the PSE index is down negative 18.32% from where I started investing, and so is the FM ETF fund down 14.37%. Now, the Philippine market is still lagging behind major indices like the USA, but the best thing about it is we can buy more companies at a discount. And as for me, a dividend investor, this is a great opportunity to increase my holdings in companies that have high dividend yield. When stock prices are down, the higher the dividends is. A lot of companies in our country, even though their stock price went down hard, didn't change their dividend payments and some even increase it. That's why in our market, it's easy to spot companies with 3% or higher dividend yield. That's why I never complain even though our market doesn't move. This gives me more time to invest more so that when the market does climb again, the higher my profits would be since I've invested more money. Now going to the stocks I bought this month, DDMPR, Globe which I've been rapidly buying ever since last month, AUB, MREIT, and FGen. I bought a lot since I gained a lot of dividends this month, so I just reinvested back to the companies that have high dividend yield that is still trading at a discount. With this, these are all the stocks I own. Globe is now my largest holding that takes up 12% of my portfolio, followed up by LTG 10%, and the stocks I bought, DDMPR 6%, MREIT 6% as well, AUB 6%, and FGen 2%. Now I've been asked back then, aren't you too diversified? So what is too diversified anyway? Is it a bad thing? Diversification can be different for each investor. There's no rule as to how many stocks you can own, but what's important is the quality of each. Or do you know each investment you have? Well, for my part, before I even invested in these companies, I analyzed them myself. I have an Excel sheet for each stocks I own, and even the stocks in my watch list. So for me, I can keep up with the stocks in my portfolio. I didn't speculate, so don't force yourself to just own 10 stocks or 4 stocks. It's up to you. I don't get those investors that comment on other people's portfolio just because they own more companies than them. Don't force your rules on other investors. We each have our own comfort zone. If you're not comfortable placing your money in just 4 stocks, then spread it out. At the end of the day, the most important part is, did you invest in a sound company? Did you pay a good price for it? That's it. Just like me when I invested in these companies, for me it was undervalued and it has strong financials, and I just bought it when their price was trading below my buy price for it. I don't place rules upon myself as to how many stocks I would like to own. Now for my favorite part of investing, dividends. For this month, I earned a total of 15,707.50 pesos, which is for me an awesome feeling. Imagine I'm earning this amount without doing anything, and it was even better last month when I earned 17,977. Now if I total my 12 months worth of dividends from April 2022 to April 2023, I got 99,437, or an average monthly income of 8,286.41. Just wow! My dividends can now pay for electricity and water bill and still have some to spare. This really makes me happy because if I look at the first years of my investing journey, where in 2019 I only got 161.55, comparing it now, this 2023 with just 4 months, I earned a total of 42,460, and last year is a number to beat, which is 81,259. The total dividends I've received so far is 175,680, and there's still more to come this year. So let's see if I'll be able to beat last year's dividend pay. So with that, this ends this monthly update. I hope you've learned something from this video, and if it did, be sure to click the like button before you leave. It really helps out the channel. And be sure to watch my other videos as well, especially if you're new to investing. Thank you, and see you in the next video.